about the programs we have, because every call I get, I want to say every, but 90% of the calls or emails, hey, I got a 203K loan for you. That's like a well-known program in the renovation platform. But I only did 30% of 203Ks last year. 70% of my business was conventional rehab. So I did about 50 million of rehab. So, we're talking a pretty big proportion of our loans are with our conventional product. Why that is they're just not known about. They're very similar to the 203K. I call them like cousins because they both do the same thing. So the programs we have, just so you can know their names, it's Fannie Mae, which is a home style renovation program. Freddie Mac is called the Choice Renovation. Then we have our FHA 203K, which is more of a well-known loan. They have two products under the 203K called a limited and a standard. Okay, a couple footnotes in there. They talk about 35,000 total for work on my limited, no structural. The 203K standard is a bigger program, no limit to the amount of work as long as you're within the county loan limit, and any structural is allowed. Now we have also jumbo renovation and new construction. The jumbo renovation, obviously, for loan limits that exceed your county limits for the conventional. It's just good to have because I have some, people buying at a higher price point that need more money. So we can offer that program as well. We also have VA renovation, which is for veterans looking to buy a home that needs, a lot of the VA loans are held up to minimum standards and they might have a few things wrong and the seller doesn't want to do it. We can totally do it on our VA platform and get the home to meet the appraisal standards and get the loan closed for the veterans. No PMI, zero down, just a great program. We also do HUD owned homes. So if HUD is selling a home, let's say you're a listing agent on a HUD home or you're a buyer's agent and it's a HUD owned home, we can do $100 down on a HUD owned home and get the client all the money for renovation. It's absolutely amazing. I'm doing 2 right now. So again, any HUD owned home, if you see those out there, those are truly incredible opportunities for buyers. So again, common loan features, we do these on purchase or refinances. It's one loan that's a fixed rate loan that we give the person the money to buy the home and then fix it up. On a refinance, we would pay off their existing mortgage and give them money to repair the home. We utilize what's called a Hud Consult, and I'll explain what he does in a little bit. And work is started once the file is closed and permits are obtained. So we don't need anything done prior to closing except to get the consultant out to the home and get GCs to do a bid. And then we can also finance mortgage payments if the home is not habitable and can't be occupied, as long as the appraised value supports it. So we've had people who are renting who buy a home and need to do a gut rehab. Well, that's going to take 6 months. So we don't want them to have a hardship, and we'll roll in 6 months if the appraised value supports it. We also can pay out the contractor some upfront funds, which is very important to make sure that they are able to order, materials. So I do walk through that with your clients. I just kind of want you guys to know a little bit about the program. You can be your own GC if you are licensed on our conventional renovation and our 203K renovation. The jumbo renovation, you can't be your own GC. They strictly require third party. So again, the conventional and FHA, self-help's allowed if the borrower's in the trades or a GC. Family member can do conventional GC, but the family member can't do 203K. Our tenants on our 203K, I have a lot of tenants trying to buy from landlords right now. I've just got a slew of them coming in. I can do that on our conventional program, but 203K has a tenant can't buy a landlord clause in it. It is allowed on regular FHA because I've had, realtor chime in. Well, I just did one. It was a, FHA loan, but it was a normal one. On a normal move-in ready FHA with no repairs, you can do tenant landlord. And then if a realtor is working with a family member, they're allowed to do that and gift their commission to aid. Like I had a mom helping her daughter buy a property that needed some work, and she gave, I think, her commission to the daughter. I think she used it as a closing cost credit. That is allowed, just so you know. These are loans for any buyer. There's no income restriction. We don't do down payment programs, so I get that asked a lot, just so people know, like we can't combine this with DPA. We can finance projects that need, any property that needs major or minor repairs. And we give the buyer or the person refinancing the property the money to purchase the property or pay off their current loan, to repair it, improve, we get permit costs covered. We get There's always contingency reserve for cost overrun, title updates, architect. We include all of that. They get all of the money with one low down payment. So you can close any property as is and then use the funds to renovate. And again, you can also refinance. I keep mentioning that because it's very valuable. Down payments can be low as 3%. Credit scores typically require 620 and greater. The rate is higher. I have that come up a lot. Construction inherently has risks. You know, things can go wrong. Contractors disappear. Sometimes they take money. I mean, so we have to have a little bit higher rate because of the inherent risk of construction. When the refi is done, if the rates are lower, you know, the loan officer like Angie, for example, would come back in and say, hey, rates are lower right now and your values increase. We can reduce your payment, and they will work with your client on that. So just a little bit of info on that. The improvements are done after the loan closes. Seller gets paid once we close. You guys get paid as realtors once we close. Closings take around 60 days. That's the only caveat. I know most times at guaranteed rate, we close in 21 days, you know, or have it clear to close. These take longer because we need some pieces from the consultant or contractor to order the appraisal. And if there's any change to floor plan, we need a floor plan, because if you're doing an addition, we have to pick up the square footage. We are not appraising the house at the purchase price. We're appraising it with all of the updates. So a little bit, you know, a couple different things there. Primary residents are eligible, you know, 1 to 4 family. Second homes, we do as well if they're 1 unit. Investment, I can do 1 unit long-term holds for rent. Like, so if you're buying a house that you just want to update to increase the rents and you're going to rent it out, we can do that. We do not do flips. We can do any type of PUDs or condos. If you're doing a condo, we just have to have the HOA give a letter that they approve the work. We also do mixed use properties. So a lot of options there. Here's our loan limits, for example, in Cook County. You can see the FHA loan limits are a little bit lower than our conforming. That's one of the reasons I did more conforming, is when the prices started going up on homes. We just tend to need that more. But in a lot of areas, the prices are well within the range of FHA with, you know, 620 credit, 3.5% down. Seller can credit closing costs. You can be gifted. I mean, there's just so many opportunities. I just don't think people realize that they can get into these homes with very little down. As agents, how can you leverage this to help you? I think this is where I really want to focus on the call. You have a buyer that maybe needs to be near their family to help with the childcare. There's a certain school district, or they need to be closer to work. You know, with today's inventory challenges, maybe they're passing up homes that they're like, oh, well, that, you know, I don't have money to fix that up. Or, you know, this is only a 2-bedroom. We need a 3-bedroom. Don't dismiss those properties. Talk about the program. We can help them get into these properties, adding, you know, a bedroom, adding or creating an open floor plan. Maybe they need a garage built or a driveway. Things like that are all allowed. So please utilize this, like the education that you have from this webinar, to maybe go back and think about clients or new clients that come in. And, you know, knowledge is power. Maybe they're talking to you and talking to another agent, and you mention this and no one else does, and maybe you'll earn their business. It's just a way to help, you know, get you educated to hopefully win more transactions. Obviously, on the listing side, you control everything. If you have a property that's distressed, this is a great way to move it quicker, and maybe not just take a cash offer that's going to be so significantly under what maybe a seller wants. And in addition, you know, where this came in really handy, I did a presentation last year. An agent called me and said, you know, I just got to share this story with you. After you presented, I had a call from a client who had 2 siblings and their parents passed away. They wanted to sell the home. And, you know, she had told me they had lived there for a very long time. The parents couldn't keep up with it. You know, property had some challenges. And she's like, great, you know, I have a great program. Let's meet there. The other 2 siblings had an agent too, right? Everybody's got an agent. So they're all trying to get their agent, you know, to do the listing. The other 2 agents came in and were like kind of negative about the house. Well, you know, we're going to maybe need a cash offer, and, you know, this is outdated. It can take 6 months to move. Whereas our agent, who we showed all this, brought the material, explained that they'll be able to move it quick, was super excited about the house. Guess who won the listing? Our agent. So utilize that if you can, you know, when going to listings and telling them there's different opportunities. You know, if a home's like, you know, really clunky and boxy and you're like, hey, we can, you know, market this as, you know, they can update it, open the floor plan, things like that. Knowledge is power. And when you have that, I think you're going to win more business. So hopefully, you know, close more transactions that are as is. Any renovation can be done. We can, you know, Angie has flyers that, you know, you can give out at the open houses. So, and we have that in the RAC, you know, Angie, for you guys to be able to print. We can do any REOs or foreclosures, estate sales. So, you know, just make sure that you're utilizing the program that we have, hopefully to help your clients. But I'll open it up to questions. You know, if anybody maybe has done one or has questions or concerns or how to leverage it, please jump in and, you know, we're happy to answer anything. And you can unmute yourself. I think you just click it. So please unmute yourself. It's a small group here today.
Chris, can you go over one more time? Because I think this is the question I get the most. Can you just one more time touch on what's eligible? So primary, investment, and secondary homes?
Yeah, so primary investment or primary residence always, like, great. Second homes always, but not on FHA, conventional. Second homes are for conventional only. Investment, 1 unit only, no flips. So I'm going to keep stressing, I'm an investor. I want to buy, you know, a $200,000 home and just update the kitchens and bathrooms so I can get more rent. That's totally allowed as long as you hold it, you know, meaning you rent it out. We can't flip it and sell it. That will dissolve our program. That's why I keep stressing that. So mixed use properties we do on our FHA program. That would be like a state farm office, like, you know, commercial on the bottom, 3 units on top. You can do condos on our conventional and any type of townhome. So do you think that, you know, addresses the property types?
Oh, absolutely. Because I think everybody just assumes that this is a primary residence only program. And I also think that most people only think that FHA 203K program is the only one available, which that's why I thought this webinar would be so helpful, is because that conventional product is so huge and little is known about it.
Well, yeah, and it's amazing if you think about the volume I did last year, that's 65%. I was actually surprised at that number. You know, I do my year-end analysis and
Sure.
at 65% were conventional. Number one, it's a little bit easier to do conventional, not as many hoops, you know, in terms of property condition. That's the reasoning behind it. But obviously with FHA, we have a lot of people coming out of, you know, if your client's 2 years out of bankruptcy, they're eligible to go FHA. So, you know, we just have to pick the program to fit the client's needs.
So is 620 the low credit score for both programs, for conventional and FHA?
While conventional guidelines say 620, I rarely can get them through below 680. FHA is 620, but we do have exceptions, Angie, down to 580. But, you know, it's got to be a strong file, which that's an oxymoron if you have a 580 credit. It's typically not a strong file. But I've gotten a couple through where there was just like a weird collection and the borrower didn't have a lot of credit. You know, it wasn't like bad credit. It was like not a lot of credit. And they had great DTI. They had their own money. You know, they just didn't know how to fix their credit. So we got that one through and then we helped them get their credit repaired. So yeah, that's a great question.
I have a question. This is Janet Scanlon, Century 21.
Hi,
hi. You said that the interest rate was higher. How much higher are we talking?
I mean, typically 0.5%. It could be 0.75%. It depends on credit score. Most of the time it's 0.5%, but when I get some challenging credit scores, it could be a little bit higher. Sometimes we negate that by just charging a slight discount fee to keep the rate, you know, hopefully closer. But right now, you know, I'm assuming everyone knows rates have really increased since January 1st. It's been, you know, an increased market. You know, today again, as I'm watching our market, we're having another tough day. So, you know, rates are up right now anyway. I talked to somebody a few days ago and they were shocked that rates were in the 3s, and I was shocked that they didn't know they were in the 3s. So, you know, rates are up a little bit, but I just locked one good credit on FHA with a good loan amount. See, everything matters. And that was at 3.875 with like maybe a super slight discount fee. I had a borrower with kind of tough credit, like 620. That was more around 4.375. So it just depends on credit.
And one more question too. I know that you said that the appraisals are for the completed product. Are you having any challenges on getting those appraisal values up? I did one 203K where they improved their basement, which I know appraisers aren't really fans of that value going up. And this was on an expensive house, but how are you seeing the appraisals?
Well, that you just said the magic word, basement. You know, basement's not something you get a lot of value. And I have people like, oh, I want to dig out the basement, add 2 feet and finish it. Well, there's not value there. You know, normally we don't have problems because FHA has a very odd calculation. I'll try to explain it. On a $300,000 all in, meaning you bought it for 200, you're doing 100, they will loan up to 110% of 300. So I know that's a little complicated, but they would go to 330. So I'm sorry, 270. So if the value is 270, they'll still do that because they have this 110% calculation. So I don't have a lot of problems with FHA, but I immediately talk to the agent like, hey, this is what they're going to do. Are we going to be okay? You know, like, are you seeing comps? And most of the time it's a yes. Obviously, sometimes we have a couple challenges. Where my expertise comes in, I've been doing this for 20 years, is that I'll see in the bid, we might be 5,000 or 10,000 off on value, and they'll have like a glass shower door for $3,000. I'll be like, take the shower door out. You can put that in later, but just for now, remove it so we can try to get this done. Because the glass shower door is not adding value, but it's like impacting my appraisal. So there's a few things that are always in every write-up that I'm like, the kitchen backsplash, not super critical, not adding value, but it's a nice touch. But we'll take out a few things that are more, you know, higher end things that they can put back in later, either with the contingency or with their own money, and we get it to work. I do have a couple that don't work here and there, but it's not often because of just how we know, you know, we check a lot of things before we jump into this.
Thanks.
Anybody else? Anybody else have something? Okay, well, I know this is being recorded.
1 second. Can I just read on the investor side? Is
Yes.
it 1 unit per loan, but can they do multiple loans on multiple properties? Jennifer is asking.
When I say 1 unit, it means single family, condo, townhome. If you're an investor, like I had an investor buy, like in the past year, I've helped them with 3 different properties. As long as they're not multi-unit, like we can't do 2, 3, and 4 unit properties. Those are multi, we can't do that. But that one investor did buy 3 properties using our platform and updated them and got higher rent. So yes, they can do multiple 1 unit properties. That's not a problem.
That is very cool. I did not know that.
This is Amanda with EXP. I have 2 questions. What were the down payment option, like requirements again for those, for the loans that you have available? And then as far as back to that investor question, how long do they have to hold it? Because I do have an investor, this would probably really benefit him. How long do they have to hold it to be, obviously he's not flipping it, he was going to use it as a rental, but is there like a requirement how long they have to hold it for? There's my wording.
Just 1 year. Yeah, and then for down payments, 3.5% on FHA is for single family through 4 unit. It's the lowest down payment we have. It's amazing. Conventional single family is 5. But if they do qualify for, we have what's like for a little bit lower income, they call it like moderate income clients, there is a 3% program if they qualify. So I do check that for everybody. Single family, so that single family will be 3 or 5%. As you step up, and this is the purchase price plus repair, not just purchase price. I do mention that because a lot of times people will barely have money and they're like, oh, I'm buying a house for 200,000. I need 7,000 to close. I just had one and it was, I wanted to beat my head against the wall. He wanted to do work of 100 grand and he kept saying, well, I only need 7 grand. I'm like, well, no, you're into the house for 300,000. We need 10,500. It's on total acquisition. So conventionals 5% down for single family. 2 unit is 15% down. 3 and 4 units, 20% down. That's unconventional. Again, I'll go back to FHA, 3.5% no matter what you're doing, which is, you know, great if they fit into that box. So those are the down payment. Investor for you, since you asked that question, 25% down of the purchase price plus all repairs, but we will give them back all the money, you know, in the construction escrow for all the repairs. So I have a lot of people doing like starter homes with that, you know, 2-bedroom, 1-bath for rent. They'll buy it for 200, maybe put in 50 grand of work. So they're really putting down, you know, about 65, 70, and we're giving them back 50, which they love because then they can leverage their money to do multiple properties. So great question on that.
I think what's so cool about these programs is that it can literally be, you know, a kitchen update, or it can be a pull down to the foundation. I always thought that was the coolest. The first time I ever saw you present, Chris, that like blew my mind. That as long, you could literally do a complete tear down, and as long as the foundation remained, it was still considered a reno and not a new construction. And that was definitely surprising to me. I never knew that
And
would be
that's on the
thing.
FHA only, just so you know. The conventional does not allow to go down the foundation. They allow for pretty major rehabs, but they typically want the, you know, a couple walls to stay up, you know, so that little trickier on conventional, but FHA, we do it all day long.
Yeah, it's a very cool program. And I think there's gonna be a need for this coming up.
I have a quick question.
Yeah.
My name is George with EXP. So on the listing side, if I'm receiving, say, an FHA 203K or a conventional, at that point, what's stronger? I know they're going to both be very similar, but is there one that will be stronger opposed to the other, or no?
Yeah, the conventional is definitely stronger than the FHA, only because FHA has more minimum property standards. So for example, you know, I'd like to share this example. I have some areas where there's well and septic. Conventional doesn't really care about the well and septic. FHA, it's like, we need well and septic inspections. We need the diagram from someone on on the property outline to show us the distance between the well and septic to make sure that there's no issue with that. And that doesn't come up in conventional. So like, that's an easy example to show you where you could see, okay, we need more tests on FHA for that. So that's one example. Another is that FHA has more HUD minimum standards. So we're from the Midwest. Obviously, our houses have some peeling paint, you know, just from the wear and tear and the weather. FHA cares about that. They would want that, you know, the peeling paint fixed if it's built prior to 78. On conventional, they don't care about that. So there's just differences in them both, but the conventional would be the stronger offer, or if you're accepting an offer, it would be stronger to take conventional versus FHA. But for FHA, I think the positive is that if you are having trouble moving a house and you have an FHA buyer, if you're doing the renovation program, the condition of the property is irrelevant because it's going to pass through our program. And that's what helps a lot of sellers take it. You know, if they're in an area where it's mostly low down payment FHA buyers, they will be more comfortable taking the renovation because the property condition is irrelevant. It will pass the appraisal because we are doing it subject to all the repairs.
Awesome. Thank you.
I just thought of another question. Talk to us a little bit about the contractors that are doing the work. Do these people have to be, so on the FHA side, do they have to be FHA approved contractors? Because a lot of people come at me and they're like, you know, I'd love to do a program like that, but, you know, my brother's a licensed electrician and my brother-in-law's this and that. Can I use them? And I don't even know how to answer that, Chris. So could you talk about that a little bit?
Yeah, that's a great question. Depending on the state and municipality, that's where the answer starts. So it's a little bit complicated, but like in Indiana, they don't require a GC to be licensed. If the city that you're working in requires it or a registration, they would have to do that. But, you know, if your brother is, meaning not a licensed contractor, but is licensed, and they do projects where they run it, they can't just be, oh, he's an electrician and all he does is like sub, you know, like go into different homes and do electric, but he's never managed a project. Then he can't get approved. So, you know, if you're saying, yeah, the guy wants to like bring in all these different trades, no, that won't work, because we need someone to control the process. Our bank can only pay out one GC, and the GC pays out the subs. The exception to that is if you have well and septic, that's a specialty. We will pay out a well and septic company and then the GC for the rest of like the home renovation. So, there's an exception. But if your brother was a contractor and you want to use them, you can on our conventional program. FHA does not allow it. It's an identity of interest, but the conventional program does. I have a lot of family members doing that. And I would be able to answer that case by case. I know that's maybe not the best answer, but family members who are in the trades who manage projects can do it because they have to go through a sign up package that says, and they have to manage projects similar to what you're doing. So I had a guy who really did small projects, 30 grand, 50 grand. All of a sudden, our buyer brings him on for a $300,000 project. Well, he didn't have the capital to manage a project like that, so we couldn't approve him. So you want someone who's does work similar to the projects you're doing to make sure that they know how to, manage the money and that they have money to be your general contractor. They will get material funds up front, but they don't get paid until work is performed to pay out them and their subs. We give material money up front to order materials and get things started.
Okay, that's great. Yeah, I did not know any of that.
But you can refer all the agents on the call. If you have contractors, you can refer them. If there's Chamber of Commerce who have, GCs there, or, Angie's List, or if you just know people locally through Facebook, or if clients, that's how we tell them to try to get their contractors through that kind of platform.
Do you have a name of, like a list of names of some general contractors who work well with this program?
If the files are in Illinois, we try to help out with that through the consultant. I personally don't have a list, but the consultant can sometimes help out. In Indiana, I'm not as versed with contractors, but we always try to find the consultants, or we can look at previous closed files in the area to see if who the contractor was and see if we can connect them with the buyer. So we do try to help in any capacity that we can.
Okay, well, it looks like maybe it's a wrap.
Great. I mean, I would say at this point, if anybody does have any, individual questions or scenarios going forward, just reach out to, Angie or Roy, and they'll connect with me, and, we'll make sure we answer any questions. Or if you need flyers or worksheets for open houses, please let us know. I mean, Angie, if you want to add on that.
Yeah, I mean, I think it's gonna, once the market starts shifting and selling houses isn't maybe quite as, as easy as it's been these past few months, all those flyers and things are gonna become important again. So certainly when you guys have listings, Roy and I are able to create any flyers that you can put in your listings that maybe you think would be a good fit for these programs, just like we've done for, properties that don't fit these programs. We do flyers and things for you guys to put in your houses. And certainly, Chris, I know, is always able to speak to you guys more in depth too, if you have a specific client or scenario. But yes, you can always start with me, and then we'll pull Chris in when needed. I've often told many of you when you've called me that I know just enough about this program to be dangerous. And that's why I thought it was important that maybe we have Chris join in and even refresh my memory, because when I do have these types of programs, they get referred over to Chris to do her thing. And unfortunately, when I'm not delving into a file like this, it's hard for me to know all the nitty gritty. So thank you for your time today, Chris, for teaching us. And I know there's a lot that goes into these programs, but it helps for us to all have like a high level idea of what's going on.
Okay, no, I appreciate that. And thank you everyone for your time today.